Right in front of you is one of the most powerful and accurate entry models in today's markets. And in this video, I will be breaking down exactly how you can find it and use it today. But there are a couple rules that you need to follow for this entry model to work. So make sure you stick throughout the whole video and follow it as you should to get the best results. Before I show you the entry model on this live chart, I want to go down to the drawing board and explain a step-by-step how it works, how it looks, and why it makes so much sense. Okay? So I'm gonna start with the beginning. At the beginning, the price needs to consolidate, accumulate, whatever you wanna call it, be in a range, okay? While the price is moving in the range, what does that mean? So while we have a series of equal highs and series of equal lows, that means that multiple buyers are stepping into the market at this point, which means that their stop losses are below, okay? So their stop losses are below, or in other words, liquidity is below. The same way sellers are entering the market here with their stop losses above, or in other words, the liquidity being above. Okay? Now, next step, we need the price to break below and back into the range. And this move needs to happen quickly. And this move is called liquidity or liquidity grab. Why? Because a bunch of sellers are entering the market here. Their stop losses are here. And with this move down, we grab the liquidity. And now we're ready with this liquidity to push the price higher. So that's step number 2. And the last step, what you need to do is you need to find either fair value gap somewhere inside of the range or a fair value gap that was formed within this push, because we need the price to break, okay, this fair value gap, and only on this retest we're gonna enter the markets. Now, some of the key things you need to understand, that all of these steps, the range, the liquidity grab, and the retest of fair value gap needs to happen in order for it to work. All right? There's a couple things you need to understand, and I'm going to show you now. To begin with, we have the range. We have the equal highs, okay? Which means there's a lot of liquidity laying above, okay? Now, we have a series of equal lows, which means a lot of liquidity is laying below as well. So here's our equal lows. The liquidity lays below. Also, with this massive push, we gather liquidity here and we gather liquidity here. So step number 1 done. Step number 2 is also done. Now, step number 3 is our fair value gap, which is going to be right here. Pay close attention because I'm about to tell you the rule that is extremely, extremely important. Now you could say, Davi, but before the price broke above and retested this fair value gap to the downside, why didn't you take shorts here? And that would be a great question, and that brings me to a very, very important point, which is this entry model can only be traded with bias or a market structure. So if your higher time frame market structure is bullish, this entry model can only work for buys. And if your higher time frame market structure is bearish, this entry model can only work for sells. It does not go both ways. So this is an entry model. This is not a strategy. This is something you build on top of your strategy to get more accurate and more precise entries. So first, you need to identify the bias. Doesn't matter. You're looking at weekly candles, daily market structure, 4-hour change of character, whatever you're looking at. This is an entry model. This is not a strategy, okay? But this is like a strategy for your entries. So since my higher time frame market structure was bullish, I'm only looking for buys. So even if this entry model like happens, since it's happened to the downside, I'm not entering it. But as you can see, since I'm following my bias, the price eventually broke above the fair value gap and retested it. And that's when you enter the markets. So when you enter the markets right here, okay, your stop loss can be below the fair value gap, or it can be below the market structure, or the safest option, it can be below the previous liquidity. In this case, let's use this, and you know, you target, let's say 1 to 4, the price just shot up like crazy out of the screen. So I want you to take a look at this and really practice it. Remember, it goes step by step: equal highs, equal lows, liquidity, and break or retest of a fair value gap step by step. And rule number 1, only trade it in the direction of a higher market structure, of a higher time frame market structure. And you'll see how accurate this is. Now, this doesn't happen too often. You will not see it every single time. But whenever you see it, whenever you will be able to identify it, you'll be able to understand how powerful this entry model is. Now, if you want me to break down this entry model in more detail, or if you want to learn my whole trading system and watch me trade live on a daily basis and join a motivated, hand-picked, selected group of students, then check out the first link in my description for my 101 The Hidden Edge mentorship. It's basically a mentorship, a closed circle where I guarantee I will make you profitable. Not that I will only teach my strategy, but I will also show you how it's done on a daily live trading calls. So if you are truly motivated, and if you truly want to learn and make this your career and make a living from trading, make sure to check out the first link in the description. Fill out the form in detail so I can select you, and hopefully I'll see you on the other side. Peace.